Hi, today is Sunday, April 22nd, and we're taking a look at Apple and the week ahead. So, Apple, you can see that it sold off on quite a bit of volume on Friday for monthly OPEX. Um, every quarter, we see these supply cut rumor stories come out, and like clockwork, in my opinion, what happens with this is that there are funds out there that amass a nice large position in Apple, and then they sell calls against it in order to make up for the fact that Apple sort of trades within a 20-point range or so, and you know they really make their money on pushing this stock down severely 10 points or so before we head into earnings. And sure enough, as usual, supply cut rumor comes out on Thursday, and then Katie Huberty of Morgan Stanley, or whatever house she's from, she's like one of the top ones on the street for analyzing Apple. She gave a downgrade and said that the quarter is going to be horrendous. So she really got the ball rolling. Something that I've been watching on Apple for quite a while now is this bull fork that it's been trading in, and I'm trying to get my thinkorswim to go up for me here. And this bull fork is created off of some really good significant swings, and that's why I think it's God. This is like horrendous when you see my Apple chart um, uh, that far out like that. But in any case, the swing low from September to the 20 to the initial 2018 high to the low that we made in February, and that's a word. I chose the low the day before the February low because this candle was just obnoxious that was printed on the day of the February low. Um, Really not a reliable candle. I don't like the shape or form of it whatsoever, and I thought that this seemed like a more viable place where funds probably were stepping in, and that this was just, a last crush out. And when I pick up this point of fork and move it down here, it ends up just sort of making it align so much to this uptrend right here that why have two things there at once? I'd rather have something that gives me a possible other clue of support that comes in before hitting this trend line. So because of that, I think that if the bottom of this fork breaks, I think that we're probably going to work our way all the way to this trend line. And if that isn't enough to feed the beast, then we've got a gap right here to fill that is still sitting there unfilled back from the day that the February low was set. And that close was 156.41. Okay, so had an island top that was put in this week. The gap down on the supply cut rumors comes in. The Katie Huberty downgrade, and if we are going to head down further, we're either just going to throw a little pin down through the 200-day simple moving average and bounce off this level here at the bottom of the fork around 164.40 or so. And you can see that's where all this support was back here earlier in the month and late in March, 164.40 to 164.50. If that's going to break, then you need to step aside and let this work its way out. That is, if you're buying calls, if you're sitting on a long position that you already own, I wouldn't say go ahead, and I wouldn't say stop yourself out of it, not by any means. But if you're looking for a place to add to your longs or to buy calls, and you see this 164.50 level break, I would say wait for a test of this uptrend, which is probably going to take you all the way down to test the 160 flat level, if not even break through that a little to 159. Okay, if we come in on tomorrow and we start to trade up, and it starts to look like we set our low on Friday at the 200-day simple moving average, then you have very obvious things that you can go after here. You have all of these simple moving averages, which are above Friday's high, because you can see Friday's high was a direct rejection at the 20-day simple moving average. And above that, you have your 50 and your 10-day simple moving averages. And if this selling doesn't abate soon, then this 10-day simple moving average is going to curl over and cross down through the 50 and the 20. And so if they sit here and wallow inside this range of Friday for a couple of days, this stuff is going to take place. And then, well, worst case scenario is that you just sit for a couple of days inside of Friday's range, and then finally you have that crescendo sell-off at the end of this week, and before we hit May 1st. I think that's when their earnings are. Trying to get my needle to come over here. Yeah, May 1st. So you've still got a good solid week before you're even going to get earnings out of Apple. I think that's a week from Tuesday is May 1st. So you've got a ways to go, and a week plus 1 day of trading, and so that's plenty of time to fake everybody out, suck everybody in, and then crush them once again. So mind your 200-day simple moving average. Mind a little break of that to 164.50 or so. And if that breaks, step aside and wait for 160 and see what happens from there. And worst case scenario overall is filling the gap to the 2.9 close, which was 156.41. And I will clean up this chart, fix that level there so you get like an exact read on that, and post that so that you have those levels at hand. But anyways, that's how I would approach Apple next week. Be cautious. Don't go too crazy jumping in here getting long. Be mindful of the midpoint of Friday's trading range. Probably, you want to add the high and the low and divide it by 2 to get an exact read. But just using my eye, I can see 168.50 or so is probably the midpoint of Friday's range. And if they can't make a move past that, then this thing's going to go lower. It's probably going to break Friday's low and break below the 200-day. And we haven't seen breaks of the 200-day since back at the February low. So that stands to reason that we might end up filling this gap back here from February, or even just, leaving people high and dry from quite filling that gap and just bouncing off this uptrend here, which would hold at around 159, 160 and rising. And all of that, well, 159 to 160 and rising, that rhymes a lot with short calls for this Friday's expiration. People selling short those Friday calls at 160 would make a lot of sense for these funds with a big position. If they were short calls last week and they're short calls still this week at 160, they're going to make it their job to push this stock down to close underneath 160 on Friday. Okay, or at least push down there this week so that they can cover those calls and then buy the stock up at the end of the week instead. I hope this makes sense. Good luck and good trading.